I adore the YouTube community for Tesla enthusiasts. Many of these guys have been with the company since the beginning and have made a fortune from their early predictions. One of the biggest supporters of Tesla on the platform is a YouTuber named Dave Lee. This guy makes some really wild predictions about Tesla. Let's look at one of the most outrageous ones. Dave Lee recently shared a post in which he stated that he will be able to increase the value of his holdings in Tesla by an incredible factor of 100. That's right, 100 times the initial investment, which he initially thought would only increase by a factor of 10. His first prediction was that Tesla's market value would increase from $3 but $40 billion, but he now believes that $300 billion is more feasible. That's a startling return on investment. A 100x return is uncommon, if not unheard of. Now, tune in to find out why he believes the world is about to undergo a transformation brought about by Apple's masterpiece, the iPhone. Before we get there, hit the like and subscribe buttons. As you surely already know, if you're an avid follower of this channel, Dave Lee believes Tesla is only getting started on its journey towards complexity through innovation. Despite the current status of the macroeconomy, the investor was taken aback to discover that Tesla stock had gained by a factor of 100 in just over 8 years solely by owning common shares. Even though many people were expecting Musk to speak about Twitter's future, he spoke extensively instead. According to Barron, some of the most significant points that came out of Tesla's earnings call were the company's incredible quarter, in which it exceeded analysts' estimates by $3.32 billion in revenue and $18.7 billion, up 81% year over year. Wall Street had expected Steve Tesla to make between 2.20 and 2.30 cents per share and generate $18 billion in revenue. In addition, the company's operating profit came in approximately $1 billion higher than expected, causing Tesla shares to rise $5 in after-hours trading from around $976 to nearly $1,017. Many rely on their interpretations of the earnings report to determine how well their firm performed in comparison to analysts' projections of its revenue margin, earnings per share, and other metrics. He continued by saying that most ordinary stock shares are unknown to analysts because some of them work for companies where they don't even own stock. As a result, it doesn't matter if the company's earnings impress or fail to meet the expectations of these analysts. Investors' and analysts' expectations for early-stage, high-growth companies are frequently at odds. But as Tesla has demonstrated, analysts' expectations for However this ring is real now, Tesla's earnings report surprised a lot of analysts because they had been concentrating more on how much the company had beaten their projections than on whether or not it had exceeded investor expectations. However, Tesla's share price only rose by 6 after the report because the company had only barely met or slightly exceeded investor expectations due to recent strong delivery statistics, which prompted the call and statement. Investors had high expectations for Tesla and its management, so it's reasonable that they were surprised, since a stock's worth is determined by a company's capacity to turn a profit. Lee claims that the reason Tesla's first quarter results were below forecasts was due to revenue limitations. According to Credit Suisse, heightened national efforts to contain the COVID-19 virus led to the closure of Tesla's Gigashan factory on March 28. This was followed by a spike in the number of cases that were recorded in China. The company's management appears to have things under control, but even so, Swiss said that even though the Shanghai factory, which produced over half of the company's cars last year, was shut down for several weeks due to an electric problem, they remain optimistic. The idling started at the end of the first quarter and was expected to have a significant impact on the company's performance in the second quarter because the Shanghai factory is the largest by output and might experience a drop of about 90. For Tesla to continue its positive ascent every quarter, the company must deliver more cars than investors predict while simultaneously generating more revenue than they had anticipated. Dave Lee's optimism for Tesla development by 2030 is shared by many in the company's first quarter. Deliveries in the current quarter should be on pace with those in the first 3 months of the year, and 1.47 million units are projected to be provided this year overall, according to Lee. Warm investor layer for 2022 Capital stated that it anticipates Tesla shares to offer a 10 times return by 2030 and possibly even more. The company's largest holding has has been more positive in recent months. And as a result, the company increased its Tesla holdings in the first quarter of 2018 on the expectation of the company's stock will exceed the SP 500 in a period. They predicted that Tesla still had at least 10 years of development ahead of it, in that it was just now starting to experience significant growth. The way Amazon overcame the NASDAQ boom in the financial crisis is instructive, as a Tesla investor, Gary Black, also made some fascinating predictions for the future of the electric vehicle blend, which included the fact that the market valuation should be $4 trillion if all $1.4 billion were outstanding. The Tesla's market cap would be close to $4 trillion. This is based on Black's prediction that the global penetration of electric cars will reach 60 by 2030, valuing the company $1.9 trillion today based on 100 in earnings per share by the end of the decade, although Black predicted that things would get worse before they get better. Tesla will be producing about 10 million vehicles annually, with sales of light vehicles reaching 85 million worldwide. For instance, there will be significant price fluctuations in April 2022, with the price of Tesla stock falling from a high of $1,152 to a low of $902. The recent drops in Apple and Microsoft stock prices in China indicate that investor sentiment is shifting away from high-tech companies. Concerns have also been raised about the frequency of seemingly unrelated shutdowns occurring frequently. Given the current state of affairs in Shanghai, it is difficult to imagine how Tesla will be able to meet its delivery targets, as highlighted by Tesla Bull, according to Dan Ives of Wedbush, who declined to comment on Tuesday the severity of China's manufacturing problems. Dan Ives' top concern for the future, one analyst believes that Musk is in a horrible position for the second quarter of the rest of the year due to the several unknowns surrounding the second quarter of China production, which will affect expectations for the rest of the year. From what I can discern, these reports don't faze me. When Cathie Woods is around, according to a new projection by ARK Invest, the stock value of Tesla might reach $46,800 by 2026. According to 2016 business projections, the share price would reach $3,000 by 2025. An earlier report stated that, in the bull case, the price is expected to reach $5,000 by 2026, while the bear case is expected to reach $2,900. Naturally, $2,900 is much more than the current price of the stock. An investing firm estimates that, even in the worst-case scenario, Tesla's values will nearly triple by 2026. We are writing to investors to let them know that even though our 2026 forecast calibrated to them, we still think our Tesla model is methodologically cautious, and that in 2026, we expect Tesla stocks to trade like a mature company rather than one with rapid profit growth. Dave Lee has often expressed his intention to hold his stock for the long term and his belief that Tesla would enjoy phenomenal growth by 2030. His faith appears to align with Kelly's Blue Book, Justified. This is probably due to the fact that between January and March of 2022, Tesla's capital investment per additional unit of capacity decreased from 84.0 in 2017 to 7,700 this year. Sales of Tesla's Model 3 and Model I accounted for 68% of all electric car sales in the United States in 2017. According to Tesla at the U.S. Electric Vehicle Market 75 of 2022 electric vehicle sales. If the figures are accurate, with the support of its gigafactories in Shanghai and Berlin, as well as its new headquarters in Texas, Elon Musk's company appears prepared to defend its crown in 2023 when it plans to surpass its 2022 production performance. Additionally, the company plans to start production on its other vehicles, including the Model S and Model X, accounting for 7 of Tesla's car sales in the third quarter. Later this year, we'd love to hear your comments on the Cybertruck Semi and Roadster. Please leave a comment with your prediction for Tesla's stock price by 2030. Of course, hit the like button. Please like, and I'll see you in the upcoming video.